Every day, millions of people use banks for saving money, deposits, credit cards, loan, UPI payments. But have you ever wondered how banks actually make money? If banks pay interest to customers, then how are banks themselves earning high profit every year? So in this video, I will explain the banking business model in the simplest way possible. If you are new to this channel, so please subscribe for more shorts and videos and keep listening until this video and you can get some information. And let's go to the topic. So what banks actually do? So the banks do one simple thing, that is they collect money from people who save and lend that money to people who needs loan. So that is a core banking business model. And a simple real life example, so you deposit 1 lakh in bank, so bank give interest of 5% or 6%, so based on banks. So that money banks cannot idle, because that money banks give you lend that money to people who need loans like a car loan, home loan, business loan. So bank charges interest rate 9% or 10% or more, so based on the banks. So that difference can make a profit to the banks. So that is a majorly earn money. So and we have to understand net interest margin, so NIM. So what does that mean? So the difference between interest earned and interest paid. So actually banks pay interest for customers who deposited the money, so only 5%. So bank interest charges from borrowers they charge 9% or 10%. So that difference 5% can make a use profit to the banks. So that is a main way banks earn from their loans interest. And what type of loans bank give? So mainly bank give home loan, education loan, personal loan, credit card loans, and car loan. So like that banks give loans and they charge interest rate very high. So based on the bank, so some bank charge 9%, some bank charge 10% or more than. So based on the bank, I can say directly. So like that they earn money. And mainly credit cards make huge revenue for banks. So mainly not only credit cards, banks earn from through interest charges, late payment fees, merchant charges, processing fee. So banks earn like that. So credit card interest rate can be very high. So some banks give very less interest rate also. So based on the banks, I can say directly now also. And so we have to understand one thing, so digital banking and UPI. So that through also bank make money, mainly like bank apps like Bank of Baroda app, like that online payments and UPI payments. So like that banks earn money that through, and so that way also get a profit bank for banks. And so now investments and bonds. So banks not only give loans, so banks also invest in bonds like government bonds and treasury bills and financial instrument. So additionally banks generate money also, that through banks earn money also, that through also investments and bonds. So what happens if cannot repay the loans people? So mainly banks may suffer losses. So we can say that is called a non-performing asset also. So NPA also we can say directly becomes a huge losses for the banks. So too many bad loans can create a huge serious problem, because cannot retaliate. So banks also give salaries to employees so how can they give without repaying the loans people? So that is the thing happens, and we have to pay within time. So maybe a banks charges extra penalty fees like that, banks also earn. And and one thing we have to understand, so banking fees and charges, so banks earn through that through also, mainly merchant charges, forex charges, account maintenance fee, processing fee, late payment fees, and interest charges. So banks earn these type of fees and charges also they can earn. So maybe it makes a huge profit for banks, especially I can say this fees and charges through. And now, so how RBI controls in banks? So mainly RBI, so in India, so banks are mainly regulated by Reserve Bank of India or RBI, we can say. So RBI controls like financial stability, interest rate, and bank regulations, liquidity, so policies like that. So RBI controls banks. So I in India, so banks are protected by RBI also, we can say directly. And you know nowadays digital payments. So now digital system is rapidly increasing, so become more digital. So now digital payments through also banks, and already I said through bank online payments, so UPI payments also that through apps also. Some banks created their own apps, so they get a money from like a platform fee charges like that through also they earn money. And so so why banks are so important, we have to understand banks why so important. Because they provide loans and support the business and manage the payments, and so helps the saving grow. So like that banks do. So banks are so important in our life also, in modern days especially. So without banks cannot function smoothly. So banks are very important. So that is the thing I would like to say. And just recollect what I said in the beginning from onwards. So mainly I said what banks actually do, and a real life example, net margin profit, and banking fees and charges, investment and bonds, and credit card charges. So uh, what happens if someone's fail to repay their loans, and how RBI controls money, and why banks are so important. So these are the topics I covered. So keep listen. Every topic is very important, and we have to understand. So how actually bank makes money, and why banks are so important. So I hope you understand uh, uh, the banking business model. So if you found this video is useful, and like this video and subscribe to Keswa Money Talks. And if you are like the content, you can share to your friends as well. If you have any doubt about finance related content, you can comment below. Based on comment I can do. And however, thank you so much, and Jai Hind.